Good day everyone, welcome to another episode of Basic Transfer Pricing. I will discuss to you Revenue Regulations number 19-2020. Revenue Regulations number 19-2020 deals with the new BIR form number 1709, which is an attachment to the income tax return of companies with related party transactions starting March 31, 2020. No? What is the objective of these regulations? The objective of these regulations is to issue the prescribed use of the new BIR form number 1709 or information return on related party transactions pursuant to Revenue Regulations 2-2013, which is the transfer pricing guidelines, and also Section 50, which is the transfer pricing law in the Philippines. This is Section 50 of the National Internal Revenue Code. Through the years, transactions around the world have become more complex and have been subjected to abuse by taxpayers with intent to evade taxes by concluding transactions between them at unreasonable prices, thus eroding the tax base. That's why, as one of my professors told us, that tax is such a lonely word. Why? Because everybody seems and throw. Why? Because everybody want to save in the payment of taxes. So while majority of related party transactions are not detrimental, there is a pressing worldwide concern that they can be easily abused in the absence of a relevant framework and effective enforcement. Significant risks arise when related party transactions are not conducted at arm's length and are used as a conduit to channel funds out of the company into another related party, such as the risk of material misstatement in the financial statements as a result of inappropriate accounting and non-identification of non-disclosures. That's why the arm's length principle is being adopted in order to cure this scheme of tax evasion. And what is the arm's length principle along this line? It is the comparing the independent transactions and the related party transactions and adopting the independent price as the real price. So if there is a significant deviation from the price of the independent prices, then the related parties should adjust their prices to conform to that of the independent prices. Because the true price, according to the arm's length principle, is that of the independent party. Why? Because there is no element of control. So therefore, in order to ensure that proper disclosures of related party transactions are made and that these transactions have been conducted at arm's length so as to protect the tax base, there should be an effective implementation of Philippine Accounting Standards 24. What is this Philippine Accounting Standards 24? Deals with the related party disclosures for tax purposes. So under this passed, an entity's financial statement shall contain the disclosures necessary to draw attention to the possibility that its financial position and profit or loss may have been affected by the existence of related parties and by transactions and outstanding balances, including commitments with such parties. And where is these commitments? Embedded in the provisions or the contractual agreements. So this Revenue Regulations 19-2020 requires the submission of BIR form number 1709 and its supporting documents following the guidelines prescribed by the related revenue issuances for the submission of the required attachment to the annual income tax returns, so that tax examiners are hereby enjoined to conduct a thorough examination of the related party transaction and to see to it that revenues are not understated and expenses are not overstated in the financial statement as a result of these transactions. Why? What happens if the revenues are understated? Then the income tax would be understated also. What happens if the expenses are overstated? The net income is understated, so the tax is also understated. So that is the purpose, to understate the income and to overstate the deductions, which is very detrimental to the government. Why? Because of the inability of the government to collect now the taxes. Definitions of terms. Associate is an entity over which the investor has significant influence. That's why he's an associate. An associate, the investor has a significant over it. Significant influence. Why? Because he's the investor. He owns the capital of the associate. Close members of the family of a person are those family members who may be expected to influence or be influenced by that person in their dealings with the entity. So even close family members are considered related parties when it comes to financial and commercial transactions of the entities. No? So who are these close family members? The persons, children, and spouse or domestic partner of the persons or the management of the company. Children of that person's spouse or domestic partner, and dependents of that person or that person's spouse or domestic partners. Compensation includes all employees' benefits, all forms of considerations paid, payable, or provided by the entity or on behalf of the entity in exchange for services rendered to the entity. It also includes such consideration paid on behalf of a parent of the entity in respect of the entity. No? So, compensation includes short-term employee benefits such as wages, salaries, and social security. Contributions, paid annual leave and paid sick leave, profit sharing and bonuses. There are so many transfer pricing schemes along this line. If payable within 12 months at the end of the period, and non-monetary benefits such as medical care, housing, cars, and free or subsidized goods or services for current employees. Post-employment benefits such as pensions, other retirement benefits, post-employment life insurance, and post-employment medical care. Compensation also includes other long-term employees' benefits, including long service leave or sabbatical leave, jubilee or other long service benefits, long-term disability benefits, and if they are not payable wholly within 12 months after the end of the period, profit sharing bonuses, and deferred compensation. These are all compensation, termination benefits, and share-based payment. And what are we trying to derive at? When we talk about transfer pricing, we must see to it that this compensation are arm's length. And when we say arm's length, it is comparable if the compensation are given by the independent party. Is it acceptable? Control refers to the power to govern the financial and operating policies of an entity so as to obtain benefits from its activities. That is the meaning of control under IAS 24 or Philippine Accounting Standards 24. Joint control is the contractually agreed sharing of control of an arrangement which exists only when decisions about the relevant activities require the unanimous consent of the parties sharing control. Joint ventures is a joint arrangement whereby the parties that have joint control of the arrangement have rights to the net assets of the arrangement. Key management personnel are those persons having authority and responsibility for planning, directing, and controlling the activities of the entity directly or indirectly, including any director, whether executive or otherwise, of that entity. So these key management personnel are very important because the element or control is being performed or executed by them. Post-employment benefit plans are formal or informal arrangements under which an entity provides post-employment benefits for one or more employees, such as the following. A. Retirement benefits, pensions, and lump sum payments on retirement. Other post-employment benefits, such as post-employment life insurance and post-employment medical care. So those are post-employment benefit plans. Related party is a person or entity that is related to the reporting entity, the entity that is preparing its financial statements. Related party transaction refers to the transfer of resources, services, or obligations between a reporting entity and a related party, regardless of whether a price is charged. Significant influence is the power to participate in the financial and operating policy decisions of an entity but is not control over those policies. It may be gained by share ownership, statute, or agreement. No? So significant influence. Subsidiary is an entity that is controlled by another entity. That's why is only a subsidiary. Venturer is a party to a joint venture and has joint control over that joint venture. So let's now go to section 4, related parties and related party transactions. Okay. In determining whether a person or entity is a related party, the following rules shall be considered. So when can we consider related parties? Person or a close member of that person's family is related to a reporting entity if that person has control or joint control of the reporting entity. So there is control. Has significant influence over the reporting entity. Significant influence. Is a member of the key management personnel of the reporting entity or of a parent of the reporting entity. Sometimes the same person occupying key management in both the parent and the subsidiary. The list of family members is in section 3.2 is not exhaustive and does not preclude other family members from being considered as close members of the family of a person. So not all exhaustive or inclusive the list of family members given. It can include others. Consequently, other family members, including parents or grandparents, could qualify as close members of the family depending on the assessment of specific facts and circumstances. No? So it is not limited to the list, but it can also include other members of the family depending on the assessment, depending on their actual dealings. An entity is related to a reporting entity if any of the following conditions applies. So the entity and the reporting entity are members of the same group, which means that its parent subsidiary and fellow subsidiary is related to each other. So the related party is not only the parent and the subsidiary, but it can also be different subsidiaries of the same parent company are also considered related parties. Okay, so one entity is an associate or joint venture of the other entity. Both entities are joint ventures of the same third party, and one entity is a joint venture of a third entity, and the other entity is an associate of the third entity. No? So the entity is a post-employment benefit plan for the benefit of employees of either the reporting entity or an entity related to the reporting entity. If the reporting entity is itself such a plan, the sponsoring employers are also related to the reporting entity. So the entity is controlled or jointly controlled by a person or identified in A. A person identified in A has significant influence over the entity or is a member of the key management personnel of the entity or of the parent entity, or the entity or any member of the group of which it is a part provides key management personnel services to the reporting entity or to the parent of the reporting entity. So these are related parties. In all cases, the substance of relationship between entities shall be taken into account and not merely the legal form. That's why in transfer pricing, reclassification of accounts would take into consideration if the substance is different from the form. On the other hand, related party transactions shall include but not limited to the following: purchases or sales of goods, finished or unfinished, purchases or sales of property and other assets, and also rendering or receiving of services, leases, transfer of research and development, transfers under license agreements. Transfers under finance arrangement, including loans and equity contributions in cash or in kind. Provisions of guarantees or collateral. So these are transfer pricing issues. Commitments to do something if a particular event occurs or does not occur in the future, including executory contracts, contracts under which neither party has performed any of its obligation or both parties have partially performed their obligations to an equal extent, recognized and unrecognized, and settlement of liabilities on behalf of the entity or by the entity on behalf of that related parties. So what are the related party disclosures required? No? The required disclosures on transactions and outstanding balances shall be made separately for each of the following categories. No? Separately. So the parent, the entities with joint control or significant influence over the entity, the subsidiaries, associates, joint ventures in which the entity is a joint venturer, key management personnel of the entity or its parent, and other related parties. No? So, in this case, disclosures are required. For each of the said category, the following information shall be provided. So, what are the information to be provided and disclosed? The amount of the transactions, yes, no? The amount of the transaction, how much? The amount of outstanding balances, no? If there are already payments made, how much is the outstanding balance? Including commitments and their terms and conditions, including whether they are secured, and the nature of the consideration to be provided in settlement, and details of any guarantees given or received. Provisions for doubtful debts related to the amount of outstanding balances. No? The expense recognized during the period in respect of bad or doubtful debts due from related parties. Okay, so those are the enumerated disclosures for the related party transactions. Now, how do we do it? The procedures and guidelines. No? We have to fill up BIR for number 1709. It should be completely and truthfully accomplished by the taxpayer or its authorized representative and shall be attached to the ITRs for the current taxable year and subsequent years, making it an integral part of the latter. So, the nature of transaction and the accounts affected shall be described in detail. The business overview of the ultimate parent company, referred to in Part 4A, BIR Form number 1709, shall include a profile of the multinational group of which the taxpayer belongs, along with the name, address, legal status, and country of tax residence of each of the related parties with whom intra-group transactions have been entered into by the taxpayer and ownership linkages among them. So these are the disclosures. The functional profile referred to in Part 4B of BIR Form number 1709 shall include a broad description of the business of the taxpayer and the industry in which it operates and of the business of the related parties with whom the taxpayer has transacted. The following are required to be attached to BIR Form number 1709. So these are the attachments to 1709. Certified copy of the relevant contracts or proof of transactions. Withholding tax returns and the corresponding proof of payment of taxes withheld and remitted. Proof of payment of foreign taxes or ruling duly issued by the foreign tax authority where the other party is a resident. Certified true copy of advance pricing agreement, if any. So no spaces shall be left unanswered. If one or some portions are not applicable, such action shall be so stated. Okay, so Section 7 are the penalties. Any violation of the provisions of this issuance shall be subject to penalties provided in Section 250 and other provisions of the National Internal Revenue Code. Okay, so failure on the part of the taxpayer to attach BIR Form 1709 to its annual income tax return will have penalties, will earn penalties. So all existing revenue issuances or portions thereof inconsistent herewith are hereby revoked and or amended accordingly. Those are the guidelines on how we attach the 1709. Now let's go to the 1709 form. So BIR Form number 1709, enhanced February 2020. This is the information return on transactions with related parties. Actually, this is a new thing for us because this disclosure on related party transaction is way back as a requirement of the SEC. Securities and Exchange Commission for those companies who has different related parties already. No? So for the line number 1 for the calendar or fiscal year, and to line number 2 the year ended. No? Number of sheets attached, and then the background information. The taxpayer identification number 13, the RDO code, the taxpayer name, the registered address, no? The zip code, contact number, and the email address. Part 2, we have the summary of related party transactions on foreign related party transactions. So, who are the related party transactions? No? So, nature of transactions, the related account name, foreign related party, and then the address. No? You have to attach additional sheet if the space provided here are not enough. And then we have the taxpayer identification number, availed of treaty benefits, applicable treaty rates, amount of income or expense, then tax withheld on income or payments to related parties, and then the tax withheld by the related parties for receipts. So domestic related party transactions, we have to disclose the nature of the transaction, the related account name, the domestic related party, the address, the taxpayer identification number, amount of income or expense, tax withheld on income payment to relevant party, and then the tax withheld by the related party for the receipts. No? So we have discussed the foreign related party transactions and the domestic related party transactions. No? Because in the Philippines, there is also domestic transfer pricing. Okay, part 3, details of related party transactions per category. Details of transaction with the parent, name of company, address, nature of transactions, the amount or the volume, outstanding balances, terms, conditions, provision for doubtful accounts, no? Doubtful debts, and the expense recognized. Let's now go to page 2 of this information return, BIR Form 1709. No? So you have to fill up the taxpayer identification number and the taxpayer name, and then the summary of transactions with entities with joint control or significant influence over the entity. Okay. So we have the name of company, the address, name of transaction, amount, volume, outstanding balance, terms, conditions, provision for doubtful accounts, and then expense recognized. No? This is between the entities and the joint control activities. No? Summary of transaction with subsidiaries, name of company, address, nature of transactions, amount of volume, outstanding balance, terms, conditions, provision for doubtful debts, and the expense recognized. Summary of transactions with associates, name of company, address, name of transactions, amount or volume, outstanding balance, terms, conditions, provisions for doubtful debts, and then the expense recognized. Summary of transactions with joint ventures in which the entity is a joint venturer. So name of the company, address, name of transaction, amount or volume, outstanding balance, terms, condition, provisions for doubtful debts, and the expense recognized. No? Summary of transactions with the key management personnel of the entity or its parent. No? So name of personnel, address, short-term employee benefits, post-employment benefits, other long-term benefits, termination benefits, share-based payments, and others. No? So these are the activities that should be disclosed in this BIR Form 1709. No? On page 3, we have the summary of transactions with other related parties. No? So the name of the company, the place of residence, nature of transactions, amount or volume of sales between them, the outstanding balance, the terms, condition, provision for doubtful debts, and the expense recognized. Part 4, other information, brief business overview of the ultimate parent or the company. The brief business overview or functional profile of the taxpayer. Oh, this is an explanation. Has there been any change in the functional profile of the taxpayer? If yes, please provide what is the functional profile. This is the objective or the activities of the company. Has there been any change in the ownership or structure of the taxpayer? If yes, provide details. If there is an increase in capital and if there is sale of shares of stocks, if there is an existing authorized capital stocks. Did the taxpayer undergo business restructuring during the year or the last 5 years? How they are being restructured? Do you have pending tax return relief application with the BIR or the tax authority or other? If yes, provide details. The tax return relief application, and this is being applied in the International Tax Affairs Division of the BIR. Do you have an advance pricing arrangement with your related parties? Also filed in the International Tax Affairs Division. So this form is signed under the penalties of perjury. Signature over printed name of taxpayer, president, principal officer, or authorized representative. Okay. And also signature over printed name of treasurer. Title of the signatory and the TIN, the tax identification number. So more or less, these are the attachment that we are going to attach. And as I told you, the start of the year wherein they have to comply with this is for those of fiscal year ending March 31, 2020. You will not find any difficulties in filling up this form if you have a good transfer pricing documentation. And what are those transfer pricing documentation that you should maintain? It should be the requirements under the 2017 OECD transfer pricing guidelines, which is the source of the transfer pricing guidelines that we followed here in the Philippines. And what are those documentation required? The master file, the country by country reporting, and the local files. So if you have those documentation, then it's easy for you to fill up this BIR form 1709. So with that, I would like to say thank you and good day.